Okay, so in the previous class, we have completed the document types and the number ranges for document types. So today we will see field status variant. So first, let us try to understand what is field status variant. During the document entry means at the time of posting the business transactions, different fields are displayed depending upon the transaction and the account used. For example, when posting expenses, the cost center and tax information is usually required. However, when posting cash, the same information is not necessary. These different displays during the document processing are controlled by field status. Means, see, here we can maintain the information in 75 fields for each line item. So for debit line item and credit line item, we can maintain the information in total 150 fields, but all the fields are not required by all the accounts. Means, for example, line item means account, right? Today, we are posting two transactions, rent payment, rent account data to cash, then raw material purchase. So raw material account data to vendor account. So today we are posting these two business transactions. So at the time of debiting or creating any GL account, we can maintain the information in all the 75 fields, but all the fields are not required by all the accounts. Say, for example, these are the sum of the 75 fields: text, business area, cost center, tax rate, quantity. So these are the sum of the 75 fields, but all these fields are not required for all the accounts. Means, say, for example, text. Text means narration. Narration means explanation. So you are debiting rent. Why? Because rent paid. Similarly, we are crediting cash. Why? Because rent paid. Then we are debiting raw materials. Why? Because we purchase raw materials. Then we are creating vendor. Why? Because we purchase raw materials. Means for every account, text field is required. For every account, you have to maintain the text, right? Similarly, business area. Business area means, branch, right? So we want to prepare the business area financial statements. For that purpose, every account has to be posted to respect to business areas. That's why for every account, you have to maintain the business area at the time of posting the transactions. Then cost center. For the time being, remember that the cost center is concerned with nominal accounts only. The cost center is concerned with nominal accounts only, that too especially expenses, right? So rent account is a nominal account, right? So we have to maintain the cost center. What is cost center? We will discuss later on. Then cash account is a real account. So cost center is not required. Raw material account. Here, raw material account means inventory of raw material account. So inventory of raw material account is a real account, right? So cost center is not required. Vendor account is a personal account. So cost center is not required. So out of these four accounts, right, cost center is required only for rent, but not for other accounts. Similarly, tax rate. Tax rate means purchase tax. So the purchase tax is applicable only on the purchase of raw material. So there is no any tax on the rent payment or cash and vendor. So the tax rate is applicable only in the case of raw material account, but not for other accounts. Then quantity. Quantity also is to be maintained only for the raw materials, but not for other accounts. Like that, all the fields are not required by all the accounts, right? Don't worry, all this explanation I have given here, okay? See, in the above example, the text field and business area fields are required for every account. The cost center field is required only for rent account, but not for other accounts. The tax rate field and the quantity field is required only for raw material account, but not for other accounts. That's why for every field, there are three statuses available. So all the fields are not required by all the accounts. That's why in SAP, for every field, there are 3 statuses. For every field, there are 3 statuses. Number 1, suppressed status. Number 2, required status. Number 3, optional status. And each status is in the form of radio button. Each status is in the form of radio buttons. So here, you know the uniqueness of the radio buttons. You can select only one radio button at a time, right? So suppose for any field, if you select a suppressed status, then that field will be hidden at the time of posting the transactions. But if you select required for any field, right, then that field becomes mandatory field. Compulsory, the user has to enter the information in that field, right? Next, number 3, optional. Optional means that field will be displayed at the time of posting the transactions. Sometimes it may be necessary to enter the information. Sometimes it may not be necessary to enter the information, right? So the difference between required and optional is required means compulsory. Optional means as it says optional. Whenever necessary, you can enter the information. If not, you need not enter the information in that field. Like that, for every field, all these 3 statuses are available. Okay. Then, based on the nature of the GL accounts, all these 75 fields have been categorized into 41 groups. See, based on the nature of the GL accounts, all the fields are categorized into 41 groups. These are called field status groups. And every field status group contains all the 75 fields. Remember, based on the nature of the GL accounts, all the 75 fields have been categorized into 41 groups. These 41 groups are called field status groups. Then, in every field status group, we have all the 75 fields. Then, for every field, in every field status group, we have these 3 statuses. So based on the requirements of the information to be maintained, right? In every field status group, we select some fields as required entry, some fields as optional entry, some fields as suppressed entry. Then at the time of creating the GL accounts, right, we assign the required field status group. Then as a result, at the time of either debiting or creating the GL accounts, the fields will be populated accordingly. So at this point of time, right, it may not be possible to you to visualize exact impact of this field status variant, but try to understand to the extent you can understand. Even if you don't understand anything, don't worry. At the time of posting the business transactions, right, clearly you can see the impact of this field status variant. Again, while doing the step, I will explain something more. At that time, you'll be able to understand something more. But don't worry, try to understand to the extent you can understand. Otherwise, no problem also. See, this is the explanation for your understanding purpose. But in the interview, right, if they ask you, what is the function of field status variant? If they ask you, what is field status variant? In that case, you have to say this only one sentence answer. In the field status variant controls the display of fields to be entered at the time of posting the transactions to GL accounts. That means at the time of document entry. One sentence answer only. Everything else is for your understanding purpose. I have given the explanation. Now, it is mandatory that every company code should be assigned with one field status variant. For this purpose, we can use the system-defined field status variant, or we can define our own field status variant by copying from one of the system-defined field status variant, 1000 or 0001. We can copy from any of the field status variant. Now, while doing the step, I will explain. Definition of field status variant, transaction code OBC4. Let us log into the server. See, select the 0001 field status variant line. Somebody changed the name. Yeah, this is the field status variant 0001. Select this. Then click on copy as button. See, click on copy as button. This is called copy as button. Copy button, right? Click on copy as button. FSTV is equal to, means field status variant. So you have to give the name. So field status variant is equal to SSKH. This is our company code name. So I am using our company code name only. FSTV is equal to SSKH. So field status name is equal to field status for SSKH. Click on enter. Every step is clearly there in the material. Field status name is equal to field status for SSKH. Then click on enter. Then click on copy all button. This is called copy all button. Click on copy all button. See, number of dependent is copied 42. Then click on enter and save. Means 42 field status groups have been copied into our field status variant SSKH from 0001 field status variant. Then select SSKH field status variant line created above. This one, select this. Then double click on field status groups. Double click on field status groups. See? These are the 41 field status groups. G001 general type of accounts, G003 material consumption accounts, G004 cost accounts, G005 bank accounts, G006 material accounts, and so on. Same, this G001, G003, G004, they don't have any meaning at all. They don't have any meaning at all. They represent a group of GL accounts. That's it, right? So every field status group contains all the 75 fields, right? Now, according to the material, double click on the field status group G001. This one. Then double click on general data. This is the general data. See, these are the fields. For every field, suppress, required, optional. And these are called radio buttons. Suppose assignment number is system default to selection is optional, right? Suppose I want to enter the assignment number compulsory. In that case, you select required entry. Then the status will move from optional to required entry. Okay, so these are all the system default settings. Now, select required entry option against text field. It was already selected. Click on Save. Now again, double click on the field status group G001. Now, double click on additional account assignments. Select required entry option against business area field. Already selected. Then select optional entry option against partner business area field. It was also already selected. Click on Save. Now, first let us do the step. Again, I will explain. Now, double click on the field status group G005. This one. Double click on general data. Select required entry for text field. Click on Save. Again, so everything I'm doing according to material only. Double click on the field status group G005 again. Double click on additional account assignments. Select business area field as required entry. Select optional entry against partner business area field. This one, right? Partner business area, select optional entry. Click on save. Then double click on the field status group G005. Double click on payment transactions. Select value date as required entry. Click on save. Now, look at the screen. Here, in the field status group G001, right, we have selected required entry for text and all other fields are suppressed. Similarly, right, we have selected business as the required entry and other fields as optional entry. So in the field status group G001, what we have done, we have selected business area and text field as required entries. Later on, we create the GL accounts. So in every GL account, we assign the field status group G001. As a result, at the time of either debiting or crediting the GL account, the business area field and the text field becomes mandatory fields. And these fields will not be displayed at all. You cannot see these fields because all these fields are selected as suppressed entry. Say, for example, we have another company code in the same server, right? So F-02. I am posting one transaction in the general ledger, document date 23/12/2022, company code SSTN, business area posting date 23/12/2022. Okay, before that, see, we have one GL account, share capital account in the company code SSTN, right? So here we have assigned the field status group G001. See, in the share capital account, we have assigned the field status group G001, right? Now, in the field status group G001, we have selected business area and text as required entries, right? Now, when you're creating the share capital account, right, the system will display these two fields as required entry fields. See, for example, I am posting one transaction now. Period 9. All these things we will discuss in our class, in our company code. Currency, INR, just to make you understand the impact of field status variant. I am posting in another company code. Posting Q50. The account is 1 lakh. So I am crediting cash share capital account, right? See, the amount is, now look at the screen. I am crediting, see, line item number 2, credit entry, right? So share capital account, right? So business area and text as required entry fields. So not only in the share capital account, normally in every GL account, we assign the field status group G001. As a result, at the time of either debiting or crediting the GL account, compulsory the user has to enter the business area and text. And you cannot see assignment number was selected as optional, right? But you cannot see the other fields. Clear, no? That is the impact of the field status variant. And it is compulsory that we should define one field status variant and it should be assigned to company code, right? I hope it's clear for everybody. Now, here, G001, general type of LI accounts with text and allocation. G003, material consumption accounts. Means in all the GL accounts, which are related to material consumption, we assign G003. Then G004, cost accounts. So in all the GL accounts, which are related to your cost accounting, right, we assign G004. Then G005, bank accounts. Means in all the bank related GL accounts, like working capital loan account, term loan account, right? Then bank current account, etc., etc. In all the GL accounts relating to banks, we assign G005 and so on. Now, in the G005, it says that bank accounts obligatory value date. What does it mean? Here, the SAP system is giving one suggestion that in every field status group, you select either required entry or optional entry or suppressed entry for any field as per your requirement. But in the field status group G005, you select compulsory value date as required entry. That is the suggestion given by SAP company. Why? Why value date is to be selected as required entry? For that, we should understand what is value date. See, it is the expected date of realization of funds involved in the bank instruments like checks and bank drafts. See, value date is the expected date of realization of funds involved in the bank instruments like checks and bank drafts. At the time of creating the bank accounts, we assign the field status group G005, in which we have selected value date also as required entry. As a result, at the time of either debiting or crediting the bank account, the user has to enter the value date compulsory. Then this information is passed on to the treasury or cash planning department to help in the cash plan. That means what? So we are maintaining the bank account, right? In HDFC Bank. So we maintain one GL account, HDFC Bank current account, right? That is the GL account. Okay. So in this GL account, we assign the field status group G001. Okay. So in the field status group G001, right, we select value date as required entry. Still no clear? See, we assign, sorry, it's not G005, G001. It is G005. So in all the bank related GL accounts, we assign the field status group G005, right? Then in the field status group G005, we have selected required entry for value date, right? So at the time of either debiting or crediting the GL account to bank account, compulsory the user has to enter the value date. Say for example, today is in India, today it is 23rd December 2022, right? So today we have issued one check to the vendor. Today we have issued one check to the vendor towards the payment of purchase invoice, right? Then what is the entry we post? Debit to vendor account. Let us say the amount is 2 lakhs, 2 lakh INR. Then credit HDFC bank account. HDFC bank account, 2 lakhs. Now, here we are crediting HDFC bank account, right? Now, in the HDFC bank account, we have assigned the field status group G005, in which we selected value date as required entry. So compulsory at the time of crediting the bank account, the user has to enter the value date. So what is value date? It is the expected date of realization of funds involved in the bank instrument. That means here, today is 23rd, right? So I have given the value date as 27 December 2022. I have given the value date as 27/12/2022. This is the value date. That means here it is the expected date of realization of funds involved in the bank instruments. Here, this information is passed on to Treasury Management Department or Cash Management Department that Today means on 23rd December 2022, we have issued a check to the vendor for 2 lakh rupees, right? So we are expecting that this check will be presented to bank on 27th December. So please see that funds are available in the bank as on that date, so that the check issued by us is paid by the bank. So if you have the sufficient funds, right, you can use those funds for any other purpose up to 27th December, right? But as on 27th December, you have to see that the funds are available in the bank. Clear? This is the Indian format date because there are some USA nationals, right? So for their purpose, it is the Indian format date, right? In India, first we enter date, after that month and year. But in USA, they use like month, date, year. Now, one more example. Today, we received a check from the customer for 500,000 rupees. Then we post the entry, debit bank account, 500,000, credit customer account, 500,000. Now, here we are debiting bank account again. So compulsory, we have to enter value date. So value date means it is the expected date of realization of funds. Say, for example, I have entered 28th December 2022. That means, again, this information is passed on to the Treasury Management Department that, okay, this is the value date, right? So again, this information is passed on to Cash Planning Department that today we have received a check from your customer for 5 lakh rupees. We have deposited that check into bank. So we are expecting that this check will be collected by the bank on 28/12/2022. Till then, can we use this 5 lakhs? The bank will collect this check on 28th December 2022. So till 28th December, can we use this 5 lakhs? Any answer?
No.
No,
We
no.
cannot, yes, exactly. We cannot use it, right? So here in the accounts department, this 5 lakhs is taken as a receipt on 23rd December. But in the cash planning department, right, this is taken as a receipt on 28th December. That's how the value date helps the cash planning department to arrange the cash resources to make the payments to vendors, right, etc., etc. Clear? That's why SAP recommends to select value date as required entry in all the bank-related field status group. Clear? Now, here, how do we know which check will be collected at what time? The employees in your company who are regularly dealing with the bank transactions, they understand which check will be presented or collected at what time. Based on that, they can give the value date. Now, see the next step. Assign company code to field status variant, transaction code OBC5. Click on position. Company code is equal to SSKH. Company code is equal to SSKH. Click on enter. See, our company code has taken the first line. So field status variant is equal to SSKH. So it is mandatory that every company code should be assigned with one field status variant. Click on save. Now, tolerance groups. So what is tolerance groups? Let us try to understand first. Here in the financial accounting, we have to define the tolerance groups for the following objects. Again, in the financial accounting, these three words are repeated. Please take them off. Please take them off. See, in the financial accounting, we have to define the tolerance groups for the following objects. Number one, GL accounts. Number two, users. Users means employees in the finance and accounts department. Then vendors and customers. So we define the tolerance groups for vendors and customers in accounts payable and accounts receivable modules respectively. But at this point of time, we have to define the tolerance groups for GL accounts and users. Now, first tolerance groups for GL accounts. Setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balances written off account. Again, I'm repeating. Tolerance groups for GL accounts means setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balances written off account. Means we have to understand one more concept here in SAP before going to understand tolerance groups for GL accounts. Here, we have to understand one more concept, open items. Open items means pending items. In SAP, open items means pending items. So the concept of pending items is applicable to vendor accounts, customer accounts, and some balance sheet GL accounts. See, the concept of pending items relating to vendor accounts means what? Today, we purchase some raw material from the vendor and vendor has given 30 days credit. Then we enter the purchase invoice into system, debiting raw material account, crediting vendor account. So the system will update the raw material inventory balance and the vendor account balance. In addition to that, in addition to updating the vendor account and the raw material inventory account balances, the system will display that invoice in the red color, meaning that it is pending for payment. So till we make the payment to vendor on that invoice, the system will display that invoice in the red color, informing the user that that invoice is pending for payment. So with the help of the open items, the user can understand what are the pending invoices to be paid to vendors. Now, on 30th day, we have made the payment to vendor on that invoice. Then that invoice will be turned into green color, which is called cleared item. Cleared item. Similarly, pending items or open items relating to customers means today we sold some goods to a customer and we have given 20 days credit. So we enter the sales invoice into accounting system, debit customer account, credit sales account. In addition to updating these two account balances, the system will display this sales invoice in the red color, meaning that it is pending for receipt. In the case of vendors, that is pending for payment. In the case of customers, the invoices are pending to be received. So till we receive the payment from the customer on that purchase sales invoice, the system will display that invoice in the red color, informing the user that you have to receive the payment on this invoice from the customer still. So when we receive the payment from the customer, we enter the entry debit bank account, credit customer account, right? Then the system will turn that red colored invoice into green color. That is called cleared item. So how the open items and cleared items will look alike, I will show you in accounts payable and accounts receivable in our classes, right? But for the time being, I will show them in another company. See, status red color. In the vendor, right? Raman, and this is another company code, different, another class company code. See, Raman and Company. This is the vendor, right? Now, status red color. Status red color means these invoices are pending to be paid to vendor. 1,25,000 one invoice is there. Then 1,50,000 another invoice is there. Then these are called cleared items. So these invoices have been paid to this vendor, green color. Similarly, customer account also, right? See, in this customer account, right, 1 lakh invoices pending for receipt. And these are the invoices on which the payment has been received in this customer account. So like that, the open items are displayed in the red color and cleared items are displayed in the green color, cleared items. So open items means pending for payment or pending for receipt. Cleared items means the items on which payment has been done or the items on which the payment has been received, right? Now, that is the concept of open items for vendor accounts and customer accounts. Then this concept of open items is also applicable to some balance sheet GL accounts. It is not applicable to all the balance sheet GL accounts. They are applicable to only some of the balance sheet GL accounts. So what are the balance sheet GL accounts to which this open item is applicable? For example, outstanding expenses account, outstanding incomes account, then prepaid expense account, then incomes received in advance account. So what exactly is this? See, always we have to follow the accrual system of accounting. It is mandatory. Always we have to follow the accrual system of accounting. So what is accrual system? See, write down. Here some space is there in the material, page number 25. Some space is there, right? Please write down. Accrual system of accounting. Accrual system of accounting. It is the process of accounting. It is the process of accounting for all the expenses and revenues. It is the process of accounting all the expenses and revenues in the month only, in which they are incurred, or earned, even though they were not actually paid or received. It is the process of accounting for all the expense and revenues in the month only, in which they are incurred or earned, even though they are not actually paid or received. What does it mean? Here, every month we want to find out the profit or loss, right? For that purpose, what we do, we compare the expense of that month with the revenues of that month. Then we can know what is the profit you have earned in that month. But there are some expenses which are incurred in the current month, but paid in the next month. So normally what we do, we account for expenses only when they are actually paid, right? So there are some expenses which are incurred in the current month, but paid in the next month. Say, for example, rent. Rent of April is paid on 1st May. Rent of May is paid on 1st June. Rent of June is paid on 1st July, and so on. Let us assume that the salaries, we are paying salaries on the 1st of every month. In that case, salaries of April are paid on 1st of May. Salaries of May are paid on 1st of June. In that case, what is happening? When you pay rent and salaries of April in the month of May, we account for them in the month of May only. We account for them in the month of May only. That means what is happening here? Expenses of April are accounted in the month of May. Means if you prepare the P&L account for the month of April, right, then it will not show correct picture of the profit because the expense of April are accounted in May. So there is no use of preparing financial statements. That's why while preparing the financial statements on 30th April, we have to post some accounting entries. Those entries are called accrual entries. Say, for example, right, we are in the fiscal year 2018, June, right? So on 30th June 2018, we are preparing the profit loss account and balance sheet. We are preparing the profit loss account and balance sheet, right? So as on the date, we have incurred rent, salaries, and commission, but not paid. So we have to recognize these expenses, right, on 30th June itself. For that, we post some accounting entry. Debit rent account 10,000, debit salaries account 20,000, debit commission account 5,000. Then 2 outstanding expense account. So by virtue of this entry, your rent account, salaries account, and commission accounts are updated as on 30th June 2018 only. Then this outstanding expenses, right, is shown on the liability side of the balance sheet. So these rent account, salaries account, and commission accounts are updated as on 30th June. Now, if you prepare the P&L account, it will display correct picture of the profit. But did we pay this expenditure? No. That's why this is created to outstanding expense account, and this is shown on the liability side of the balance sheet. Now, if you prepare outstanding expense account, ledger account, right? By rent, 10,000, by salaries, 20,000, by commission, 5,000. So these 3 items are not paid, they're pending for payment. So these 3 items are displayed in the red color, which is called open items. Clear? Then on 1st of July 2018, we have paid the above expenses. Then we debit outstanding expense account, credit cash account, rent 10,000, to cash salaries 20,000, to cash commission 4,800 rupees. So total debit is 34,800. So by virtue of this entry, all these 3 line items, right, are posted to debit side of outstanding expense account, right? So these 3 items are called cleared items. Cleared items, right? I hope till now it's clear for everybody. Now, again, on 31st July 2018, we are preparing the financial statements. Then we balance this account. Outstanding expense account, we balance, right? So in the outstanding expense account, total credit is how much? 35,000, right? And the total debit is 34,800. So there is a credit balance of 200 rupees. See, in the ledger account, if the debit is more than credit, that is called debit balance. If the credit is more than debit, that is called credit balance. So in the outstanding expense account, there is a credit balance of 200 rupees. Now, my question here is, we are preparing the P&L account and balance sheet on 31st of July. Then, whether this difference of 200 rupees is displayed where? In the financial statements, which we prepare, right, on 31st of July 2022, on 31st of July 2018, this difference in outstanding expense account is displayed in the balance sheet or P&L account? Try to answer that question. Where do we display this difference of 200 rupees? In the balance sheet or P&L account?
In the balance sheet.
Okay. Any other answer from anybody? Everybody has understood the concept?
Balance sheet liability.
P&L account.
P&L account. Some people says that P&L account. Yes, some people say it's balance sheet. Let us see. Here, I will tell you two reasons. Actually, whether this difference of 200 rupees is to be transferred to balance sheet as liability or P&L account as revenue depends upon the reason for this difference. I will tell you two reasons. The person to whom you have, see, actually, we have provided a commission of 5,000 rupees, right? But you have paid actually 4,800 rupees. That's why there is a difference of 200. So the person to whom you have provided a commission of 5,000 rupees, he came to our office on 1st July 2018 at exactly 4:45 p.m. And our closing hours are 5 p.m. So I am the junior cashier in the company. So the commission agent approached me saying that, sir, you have to pay 5,000 rupees commission. Then I said, yes, we have to pay 5,000 commission to you. But as of now, right, I am having 4,800 rupees with me because this is the end of the day. And the main cashier also has left the office early because of some work outside. So I cannot bring the cash from the main cashier. So I have the 4,800 rupees only with me. That's why do one thing, take this 4,800 rupees for the time being. Later on, when you come again to our company, you collect remaining 200 rupees. For that, obviously, he will agree, right? So I have paid 4,800 rupees. That's why here I have credited cash 4,800 rupees. After all, for a difference of 200 rupees, right? He did not turn up to our company. He did not come to our company, right? Till 31st of July. We don't know. He will come next time, right? After 31st of July, also he may come, right? If that is the reason for this difference, still there is a liability on our part to pay this 200 rupees to the commission agent when he comes next time. If that is the reason, right? It's our liability still. So in that case, it has to be displayed in the balance sheet on the liability side as outstanding expenses, 200 rupees. I will tell you one more reason. See, the person to whom you have provided a commission, right? He said, sir, in this particular transaction, I am giving you a discount of 200 rupees. So that's why I have paid only 4,800 rupees. That's why there is a difference of 200 rupees. If this is the reason for this difference, do you need to pay this 200 rupees to the commission agent? No. Getting my point, everybody?
Yes, sir.
Yeah. So you need not pay this difference of 200 rupees. This is your cash discount received or discount received. In that case, this 200 rupees is to be transferred to profit and loss account as revenue. So if you prepare the P&L account and balance sheet, if you prepare the P&L account and balance sheet manually, right, the user can understand what is the reason for this difference. So accordingly, he will transfer it to either balance sheet or P&L account. But here, the system itself will prepare the P&L account and balance sheet. In that case, the system should know whether this difference is to be transferred to balance sheet or P&L account. For that, we use the tolerance groups for GL accounts. See, just a minute. Setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit loss account or some predefined account like sundry balance return of account. Based on the requirements of the accounting department, we define different tolerance groups and we assign them in the respect to GL account master record. Based on the limits specified in those tolerance limits, the differences in the GL account is automatically transferred to profit and loss account. Means, say for example, right, here we define number of tolerance groups with upper limits. And these upper limits cannot be decided on our own. The accounts department will tell you the upper limits. Say for example, we define 4 tolerance groups. Tolerance group A, tolerance group B 100 rupees, tolerance group C 200 rupees, tolerance group D 250 rupees. Now, we assign the tolerance group in the GL account. Then the system will compare the difference in that tolerance. Sorry, the system will compare the difference in that GL account with the upper limit of the tolerance group. So if the difference is less than the upper limit, that will be transferred to P&L account. If the difference is more than the upper limit, that will be transferred to balance sheet. In this example, if you assign tolerance group A or B in the outstanding expense account, then the difference is more than the upper limit, right? Then it will be transferred to balance sheet. Suppose if you assign tolerance group C or group D, right? Then it will be transferred to P&L account because the difference of 200 is less than tolerance group upper limit. Clear? So let us come in the reverse way. Here, the policy of the accounts department is that in any balance sheet GL account, if the difference is equal to 200 rupees or less than 200 rupees, straight away write it up to P&L account. In that case, we can assign either group C or group D. And at any point of time, we can change the tolerance group in the GL account master report. So, with the help of the tolerance groups, the system can understand whether the residual balance in the GL accounts are to be transferred to balance sheet or they are to be written off to P&L account. That is the use of the tolerance groups for GL accounts, right? So how to configure for tolerance groups for GL accounts, we will discuss and I will show you in tomorrow's class. Then any questions from anybody?
Sir, in this example, if this 200, the agent comes and he says that, okay, you pay me 4,800 now and transfer 200 in my bank account, maybe
No,
next
not
week.
in your bank account.
Okay,
It
it
will
is
not be
always to be
transferred to
cash.
bank account. No.
Okay.
It will be shown as a balance in the outstanding expense account. So if
Okay.
you need not pay, that will be transferred to P&L account. It's your profit.
Okay. But then if he comes after a week or maybe after a month, then what will happen? Because we have already taken up as a profit.
Yeah, no. See, if you know that he will come after 1 month, right? Still, it has to be shown as a liability.
But
You
we have given a tolerance group as B, so the system will automatically take up as a profit, right?
Yes. So in that case, right? Okay, I got your doubt. First, you have taken this difference of 200 rupees, right?
Yeah.
As revenue to the P&L account. Okay,
Yes.
Thinking that he will not come again.
Yeah.
After 1 month, he came and he claimed his 200 rupees difference, right?
Yes.
In that case, you pay 200 to him, then that is debited to sundry expenses.
Okay.
Right? Debit sundry expenses, credit to bank account.
Okay.
Got it now?
Yes, got it. Okay.
Okay, then see you tomorrow, same time. Good night and good day.
Okay. Thank you.
Yeah.